And I would also not recommend to invest there as an investment property. The real life is almost never as pretty as the Excel sheet. And there you have to distinguish, because for the point that you mentioned earlier in the video with 110% financing, so if you're a really smart, savvy investor, right, then you say, I always want to put as little equity as possible into a deal.
Hi everyone, welcome back to the channel. In today's video, we have David from Invertas, and in today's video, we're going to talk about real estate in Germany. So welcome David back to the channel.
Thank you for having me back. It's a pleasure.
For the people who don't know you, maybe you can introduce yourself a little bit.
Yeah, for sure. My name is David. I'm a retirement planning and investment specialist here at Invertas, and we focus and specialize on consulting experts that live here in Germany regarding their retirement planning and investments here. So we have two big topics that we consult on. One is the retirement planning part, and the other part is the real estate investing part, which we're going to talk about today.
So real estate in Germany, I've said this in every real estate video that I've made. For expats, at least people coming from the subcontinent, India, Pakistan, and then Bangladesh, Sri Lanka, real estate is not necessarily a status symbol, but it is a symbol of being stable in a specific land or country.
Yeah.
So when you come to a specific land, for example, we come to Germany, a lot of people or expats want to build their own home or buy something, buy real estate so that they have solid base. So it's an important topic. Let's discuss a little bit about that. Starting from the procedure, or maybe a few points that people should be aware of. What are the important things that one should consider before starting?
So big disclaimer before this video, basically, this is only interesting for you, this video and the topic real estate, when two conditions are met. Basically, when you're an expert here, first, you need to have the permanent residency permit, so the Niederlassungserlaubnis, or a European citizenship, so either the German citizenship or a citizenship from any other European country. If that is not the case, then you need to wait a bit for basically this topic. That's the first point. And the second point is you need, at least for the real estate investing, at least 40 to 50,000 euros saved up just in your either investment account or bank account, right? Because we need a room for a down payment, basically, right? So those would be...
Before we proceed in this aspect, obviously there are cases where people on blue card have gotten a real estate loan. And obviously there are again cases where people get more than 100%. So the 110% loan, where they get the total 100% of the real estate loan plus the 10% or more, 12, 13%, depending on which federal state you are, for the Nebenkosten or the buying cost. So there are always going to be specific cases based on that. But in this video, we're going to talk about the masses, which are like the mostly accepted conditions, not very specific.
Exactly. That's a very good point that you're making. So what I'm talking about is the basic criteria, right?
Yeah.
Of course, there are exceptions to that, but like in general, that is the experience that we made, that those two conditions should be there. Also with 110 financing, I can give you a story from my life, because my wife and I, we now own 6 investment apartments, right? And the majority of that we bought with very little equity. So it is possible in some cases, we'll also discuss that, to buy real estate investments with very little equity, but you need to have the money. So you need to show the bank that you have the money. If you're not able to do this, then 99% of the time you will not get that loan. So you need the down payment. That doesn't need to mean you will use it, right? But you need to have it on your account to show the bank. So those would be just a disclaimer, not to waste your time basically as a viewer. So a permanent residency permit plus 40 to 50K down payment. And then that topic is very interesting.
Okay.
And
let's say I'm someone who has, let's say 30, 40, 50,000 euros. I have PR. I have maybe a German nationality, maybe a European nationality. I am interested in buying real estate. How should I proceed?
Yeah, so what I would like to do is come back to your first point, is that like for many people, like having real estate in a country is like a sign of having settled down and all of that. And of course, you need to make a very important distinction. First is buying real estate for yourself and buying real estate as an investment, which are two very completely different topics. And in Germany in general, and again, there are always exceptions to the rule, in Germany in general, investing in real estate is tax-wise much more beneficial than owning real estate to live in yourself. Just an example, when you buy a property for yourself, an apartment or a house, right? You cannot deduct your interest rate from your taxes. You do not have a depreciation of the property, and you cannot deduct most of the repairs that you do. That's when you buy for yourself. When you buy for investment, you can fully deduct 100% of the interest that you pay, right? You have a depreciation of the property, means your property goes down in value tax-wise, you get to write it off, while it goes up in value in the real world, right? Which is great. And most of the repairs under specific rules, of course, but most of the repairs, if you do it smartly, are also 100% tax deductible.
Okay.
Means for most people, generally speaking, when you have the finances to do that, it makes more sense to rent yourself and then buy as an investment property rather than to buy for yourself. For example, my wife and I, we rent our apartment. We're renters. I love being a renter, like everything's taken care of. Also, we're flexible and all of that. But at the same time, we own 6 investment apartments by now. Yeah, just to make that important
this thing in detail as well, that you being a landlord, but per se, having 6 real estate properties, but you still rent yourself. There are specific cases where a person would be beneficial in having real estate from themselves, but in generally, as you said, it's more beneficial to have real estate as an investment.
Exactly. From the financial side, I'm talking pure numbers, because some people say, hey, for me, it has a big emotional value to own like the apartment or the house that I live in. And then I say, hey, I'm the last person to speak against it. Just be aware that it is a luxury, not a investment. Your own house is not a investment. It can be a good investment in some cases if you have appreciation of that, but even then you would have been better buying to rent. So just to get that clear, if that is emotionally important for you, then of course go for it, buy your own house or apartment. From a pure financial standpoint, that in most cases makes very little sense.
Little sense, yeah.
When we talk about real estate in Germany, as you also mentioned other countries, what is the interesting thing regarding real estate in Germany? Also, when you say, okay, we have many clients from India and US and all of that. So basically, the interesting thing about real estate in Germany in comparison to real estate in India, in Dubai, in many other places in the world, where you get much more, because that's what clients oftentimes say, you get much more rental income, for example, in India or Dubai, than you get in Germany in like good locations, right? So your rental yield is way higher. That is true, right? The interesting thing about real estate in Germany is that you can finance it. And you can finance it 100% or even more in some instances. And that is not that I'm aware of, at least nobody possible elsewhere in the world. So being in German real estate, you have the very high power of getting a loan. If, of course, you have a good salary, that is the main criteria. You need to have a good salary and you need to have your finances in order. So 100K salary with a bank when you have 5 consumer loans is, it's still not good, right? You need to have a good salary and then your finances in order, meaning little to no consumer debt, and you spend less than you make, which is like a very important rule in general in finances, but especially important to the bank, right? Because I also have clients who make 6 figures and can put very little aside, right? So it's not about the salary necessarily. Like you can spend 200K, believe me, you can spend it. That's no problem at all. So for the real estate financing, it's important to have a good salary and spend less than you make. And then the interesting thing is that you can buy an asset, right? It's worth 300,000 euros with a down payment of 30,000 euros.
Yeah.
That's why real estate is so interesting also, for example, in comparison. And again, we also talked a lot about ETFs and all of that. That's also great investment, very different than real estate.
Yeah.
But when you have 30,000, you can put 30,000 in a ETF and funds. When you have 30,000 in real estate, you can buy an asset of 300,000 euros and get the appreciation on the 300,000 euros. So that's the interesting thing regarding real estate and why the returns are so good. And we're going to look at it in the big Excel just in a second, but why that topic in general is interesting.
Okay. Let's begin with the main question. As you said, you need to have a certain amount in your bank account. You need to have, let's say, permanent residency or if you are a European national. So let's start with the first thing. I have these things and I want to buy real estate.
Yeah.
As you said, there's a distinction between buying something for yourself and then buying something as a to let or to rent out. Usually what people think is, I would rather buy something for myself and save the rent. So maybe we can look into that at that aspect, because whenever a person is thinking about real estate, the only thing that people think is comparing directly to the rent they pay and the mortgage payment that they will be paying. So maybe you can discuss a little bit about, is it correct? Is it incorrect? Or if it's something in between, obviously. So maybe you can expand more on this point.
Yeah.
Get started.
The reason why I'm smiling a bit, because that's what so many clients then tell me, oh, look, David, we want to buy for ourselves because look, our mortgage is similar to our rent, maybe a bit higher, right? And I think, okay, wow, great. And then I always ask the important question, and how much equity do you have to put in? Oh yeah, we put in 100K equity. Yes. No, your rent is not your mortgage. You have your mortgage plus 100,000 euros of taxed money, which means you need to make 200,000 euros to have 100,000 euros of tax money, right? That you put into that, and that's stuck there forever until you sell, right? And that's one of the biggest financial mistakes I see people making that want to build wealth, is buying their own apartment or buying their own house and dumping all the money that you have into that. And now what? You have a mortgage that you gotta pay, and you have no money that you can invest, right? So you're really stuck then with that house or with that apartment. And again, when that's your dream, then go for it. But when you want to build wealth, right, then especially in big cities, right, when you live, like most of our clients come from Berlin, Frankfurt, Munich, Düsseldorf, especially in big cities, yes, rent is high, right? But prices are even higher. The prices are insane, right? So it means when you actually do compare all the costs included in owning versus all the costs included in renting, you will have in some cities double the cost basically that you have renting versus owning, right? Because you need to compare like all the money that you put in, you need to compare 115% financing, right? Versus the rent. And then you have to compare also having money aside for repairs that come up. You have to compare for all the costs that are associated with like fixing up things when they break. When you rent, they are paid by the landlord. When you own, they are paid by you. So do that comparison for you. But even if you're in a big city, right? Then, and if you want to buy in a big city, which I would not recommend as an investment, right? We will get to in a second. But even then, when you really actually fairly compare the numbers, right? It will almost always be better off renting and having an investment apartment.
Yeah. So on this point, whenever I think about it, I always think in a way, let's say I'm living in an apartment that has 3 rooms and the warm meter or the rent with all the utilities is 1,000 euros, let's say. And I want to buy an apartment or a house, or let's stick to an apartment.
Yeah.
So my apartment, which has 3 rooms, is having warm rent of 1,000 euros. Can I buy a similar house in a similar position with 1,000 euros just as the mortgage? Unlikely, at least
very unlikely.
There are obviously chances that I'll be very lucky, but then the chances are quite slim. What do you think about this?
Exactly. I would exactly agree to that statement. So of course, if you find an insane deal, then very nice. But again, then rent it out. But if you find an insane deal, then very good. In places where that is sometimes possible, of course, is when you're living very in a not so developed region or very like land heavy and not near the big cities or metropolitan regions or very structurally strong regions. So in the east of Germany, for example, you can find some insanely cheap real estate, right? Where that criteria might be fulfilled. But the question is, can you sell that house in 10 years? Do you find tenants for that in 10 years? And when we look at the demographic, many people are moving out of the east, right? The demographics are going down, right? So I would keep very far away from that as an investment. But for 90% of our clients who are in somewhat structurally strong regions or in the big cities, there almost always the answer is no. And I would also not recommend to invest there as an investment property. Because what happens is similar to when you buy yourself. When you buy an investment property in Munich or in Berlin or in Frankfurt, unless you get an insanely good deal because you're a local investor or whatever, right? And even then, it takes time and connections and effort and all of that. And you're mainly running a business and not so much being an investor. But basically, when you buy in those big cities, right, then your mortgage is 2,000 euros and the rental income that you get is 1,000 euros. So that means, again, you put equity into that and now you have 1,000 euro negative cash flow. Or let's even say 500, right, when it's a very good deal. Then, again, you're stuck with that apartment. The bank will not, after 1 or 2 apartments, the bank will say, hey, you're not getting any more loans because we look at what you earn and what is expenses, and your properties are becoming expenses, big expenses on your balance sheet on your personal one. That's why our philosophy is to buy in places where the rental income plus the tax advantage covers a big majority part of the mortgage, right? So where you have your 5 to 10% down payment, and then the property pays off itself, essentially.
Okay.
Because when you invest in that way, that's how my wife and I were able to buy so many apartments, because we basically strictly had this rule to say, okay, our mortgage needs to be paid by the rental income and by the tax advantages that we get. Right? That's why the bank is happy. I have more than 1 million euros in debt. Right? That's the bank. Of course, you need a good income, yes, but you also need to have a good personal balance sheet. And the apartments that I buy are neutral for my balance sheet / add to it, even in some instances, rather than they drag it down. If I bought in Munich or Frankfurt or even here in Heidelberg, right, I could have bought 1 apartment, maybe. But then I'm done. Then the bank says, hey, you need to make a lot more money then again before we give you any more credit.
Or loan.
Right?
Yeah.
So that's why it's so important to buy in places where your mortgage is really covered by the rental income and the tax advantage that you get. And of course, that's not the big 7 cities. So what we mainly focus on, what our real estate company searches for, is mostly in southern Germany. So in Baden-Württemberg and Bavaria, because we're so structurally strong. Right? These are so structurally strong regions. A professor where I watched a video said very cryptic, behind every small town in Baden-Württemberg is like a company that has their own research and development. So that's very special about southern Germany. That's not like only towards the big cities. Yes, of course, they're also, but very broadly, we have such good infrastructure and such good employers and such structurally strong regions that we can very safely invest in all southern Germany, basically, because we know there's going to be rental demand in the future, because there are the companies that are like the hidden champions of the world.
Employees will come, stay there, and then rent out those places because the industry is there.
Exactly. And then, of course, people moving from the east of Germany to the south of Germany. That's the second thing. And also the migration. We have massive immigration in Germany, also mainly goes to southern Germany and to the where the jobs are, at least like the expert also migration, for example. Of course, yes, there's Berlin, there's Düsseldorf,
Berlin.
But all the other people are in the south of Germany.
Obviously, there's Düsseldorf, Cologne, Hamburg, but still those are big in expat hubs. But in terms of if you're looking to buy an investment, then you're not looking just for expats.
Exactly. Yes.
You are an expat. You're just looking for people who are going to rent out your place. It doesn't have to be someone of your own like background or migrant background. So you need people, actually. Doesn't matter if they are Germans, non-Germans, Europeans, or whatever.
Exactly. So that's why we focus on southern Germany, because there we know we will have strong rental demand also in 10 years. Now, when you're as a viewer coming from southern Germany, then how hard it is to find an apartment and how the rental market is at the moment. And also that way it's going to be in 10 years that people still want to live in southern Germany. That's why we picked this as basically our main focus for investing. Yeah, so that's just when you want to buy in the east and have 10% rental yield, then good luck with that. But then we're not the right fit for that. And I would also heavily not recommend it unless you're really a local investor who knows your market there very well.
Okay, let's go. Generally, again, there are exceptions, but in almost all cases, either if you buy as a rental property or buy it for yourself, the process is going to be the same, right?
Yeah,
Yes and no.
yes and no, yeah. So
Okay.
these are just two very separate things. Like buying for yourself, I would keep that aside for the call today, because there's a lot more emotional factors playing into that of what you like, what your location you like, and all of that, and what fits may be perfect for you. And people oftentimes also overpay for properties that they use themselves, right? Because you think of in terms of what can I afford, not what makes sense numbers wise, right? So when you buy an investment property, yeah, it's pretty much always the same process, and there should be. If you don't have a process set up, right, then it's going to be hard to really do something there, because
But
then you hear
like I was
this, you
looking
hear that.
in terms of the regulations, for example, when you're buying a house, the first thing is you need certain capital. It doesn't like there are different things in capital.
Yeah,
Let's say if you have your stock portfolio or your real estate portfolio, it's a separate thing. But the first thing is always going to be, or one of the main things is going to be your capital.
yeah,
Then you find a property and then you have a look at it if you want to get it appraised, and then you buy that property, and then there are going to be Nebenkosten. So that process
that is the
should be
same exactly. So that's the same exactly. And how, from a real estate investor perspective, we look at it, we basically look at your individual situation and see how much salary do you have, what expenses do you have, and then how much money do you have saved up. Of course, always deduct your safety buffer that you need to sleep well and all of that. But how much have you really in free capital that you can use? And based on that, we then suggest properties or specifically search for properties that fit that specific criteria. What I can show you is a perfect example of how a good investment apartment should look like. A property that we already sold, right? We have other properties in that same house, but that is like what I'm showing you is then the optimum how it should be, basically a perfect rental property. So don't be intimidated by the big Excel. I'm gonna point you towards the important points. So what we're looking at is an apartment that is in Freudenstadt, which is a very nice city in Baden-Württemberg, around 25,000 inhabitants, very structurally strong. It's in the S-Bahn nets and all of that. That's why I said, okay, in south of Germany, we can also go to smaller cities, right, which I would never do in the north or east, because everywhere is structurally very strong and big companies. Right? And what we look at is a 97 square meter apartment that costs 355,000 euros. You see the square meter price at 3,600 to 3,700 per square meter. Very good, because this apartment is completely renovated. Right?
okay.
So we mostly offer completely renovated apartment where everything is already done, right? Where it's like ready to get rented out or is already rented out. And we will get to why this is also very beneficial in terms of getting government benefits, no? Just in a second. Right? You see the buying price is 355,000 euros, means the Nebenkosten, the Kaufnebenkosten, so the closing cost basically is always 10 to 11%. That means 37,000 euros that you need to have in equity in order to buy this. Whether now we use that or not, we can discuss in a second, but you need to have it. Right?
Okay.
There's no bank giving you a loan for almost 500,000 euros when you don't have 40, 50K in your bank account. So that you need to have first in your account. Right? Now, the two most important things are what is your mortgage and what is your rental income. Your mortgage in this case is 1,400 euros approximately. You see here we get a very good interest rate, so 3.3%. That is because part of the property can be financed through a KfW loan. KfW is like basically a government bank or a government subsidized bank that basically gives loans for very energy-friendly apartments. Right? So as this has been completely renovated, the entire house, right? Everything's done. They did the demo. They put the Wärmepumpe in and all of that. So the energy standard is A+.
Okay.
So it's very well renovated. And that's where we can apply for 150,000 euros of the loan. We get a KfW loan. Right?
Okay.
That means we get a lower interest rate and a cherry on top that I'm gonna mention just in a second. Right? So that's the first thing, your mortgage. Right? And then the second thing is the rent that you get, which is 1,400 to 1,500 euros in this specific example. so 15 euros per square meter. Of course, this is only for properties that are very nicely done, and energy and done at A+, and all of that. For, of course, apartments that are not as highly renovated as this one, of course, we get
there'll be a difference.
Less rent, but then the buying price is also less, right? In many cases, this is already a very good buying price, right? So this is, in many cases, you get unrenovated apartments for a square meter price, right? So this is basically what I also talked to you about in the beginning. We have a very strong selection process. So we only offer properties that have very high investor quality, right? The square meter price is very good and rent is very good. So like the return is very good. And that's what you see here in the cash flow, which is always, in the first 10 years, the important thing is what is your cash flow, right? Which you see here, you have 1,400 euros rent or 1,500. Then you have 40 euros in operating costs in terms of, this is the basically Hausgeld that you cannot charge your renter for. So there's a Hausgeld and a nicht umlagefähige Hausgeld. And the nicht umlagefähige is basically just costed you, which is 40 euros for this example, which is very low, right?
Yeah.
Of course, when you don't want to manage the property yourself, we will get to that. Then you put a Mietverwaltung in there. We will get to that in a second. Then you have your mortgage, right? And your operating cash flow is 0 on 0 on this property. Means you need to put nothing in on a monthly basis, which is already very special. Then you save even some taxes, 50 euros. So you get out 42 euros out of this property each month that you 100% finance. Now, of course, most of our clients don't want to take care of the property management themselves. So in all of our apartments, we have property managers because I have a very dedicated job and career, and my wife also, and we don't want to get calls from tenants and take care of small repairs and that stuff. So we have a Hausverwaltung in all of the properties, which costs around 50 euros per apartment. Right?
Okay.
And then they do everything, right? The renters call them if something breaks. They communicate with the craftsmen. So, for example, if the water is leaking, then the tenant calls them and says, hey, water's leaking. Then they call the Handwerker that is locally there. Then the Handwerker repairs it. And you basically just get the invoice. Maybe it costs 250 euros. You pay that. And you, of course, communicate with your property manager. I just do via WhatsApp because it works very well. Yeah, and that's it. Most clients don't want to do that themselves, especially because you almost never should buy in the location that you live. Again, most clients live in the big cities, and big cities is a shitty investment when you're starting out. When you're already rich, okay, park your money in Berlin and Frankfurt and all of that and hope that it appreciates even further. But when you're starting out, again, big cities kill you, right? Yeah. Because then you're done with 1 or 2 properties. And so basically having a Hausverwaltung there would always be the recommendation. And then, of course, let's add that to that. So then it's 90 euros that you have in operating costs per month. And you see the cash flow, of course, changes. So there you have a then negative cash flow of 60 euros. Again, you save taxes with this because you can deduct the full interest. And you have a 2% depreciation of the property. Means you get to deduct 2% of the property's value. So you make a loss on a tax statement, but you make a profit in the real world. That's so special about real estate. That's almost nowhere else possible. So then you still see the
13 euros.
The rent and the tax advantage pay off your mortgage. Means when you keep this for 30 years, your tenant and the tax advantage has paid off your mortgage and you now own this outright. Right? So that's the first important thing. What is in the first 10 years, which is the cash flow? Would be as close to 0 on 0 as possible. And then the second important point is what happens in 10 years. Because in 10 years, you can, in Germany, as of now, sell your investment property completely tax-free. So no capital gains tax, no income tax, no nothing. And to calculate that, we calculate with no appreciation above the inflation. That means we just say we assume we have 2% inflation over this whole 10 years. Means your operating cost rise 2%, the rent also rises 2%, and your property value rises 2%. This is a very conservative calculation, right? Because in many instances we have seen way more than that, but we just calculate with the basically inflation. Now what happens in 10 years with a very good property like this? That's what you see here. So Your real estate is now worth 441,000 euros. You still have a mortgage of 285,000 euros. You brought in equity initially of 40,000 euros.
Yeah.
And you got a cash flow accumulated over that time of around 8,000 euros. Means your everything deducted, your net total profit, tax-free profit, is 126,000 euros after 10 years. That's already deducting the first down payment.
Okay.
And that's why real estate is so interesting in real estate investing, because you can make from a 40,000 euro investment 120,000 euro profit.
Yeah.
Just that you see, this is a Eigenkapitalrendite, so your return on the equity that you got in is 33% each year. That's why real estate is so interesting, right? Because you can build wealth significantly faster, of course, than if you just invest your money outright. Because you, again, of course, have a higher risk, right? There's no higher reward without a higher risk, right? You're going through.
But obviously, everyone knows that real estate is one of the biggest wealth builders.
Yeah.
But obviously, these, we have to give a disclaimer, right? These are very good and not ideal, but very good conditions where everything goes well. There is always a flip side to everything.
Yes.
We should also mention that as well.
Yes. So there will be the next point. The real life is almost never as pretty as the Excel sheet.
Yeah.
Right? And there you have to distinguish, because many people have a lot of fears when it comes to real estate investing because they hear horror stories.
Yeah.
And yeah, there can be some bad scenarios. Like the worst case scenario is nobody wants to live there anymore in 10 years.
Yeah.
Right?
But obviously, worst case is, again, there's nothing perfect. And like perfect is there's nothing going to go wrong. There's no leakage, no breakage, no replacement. The house is perfect. But the worst case scenario is the building collapse.
Yeah.
But even then, there'll be an insurance.
Exactly. The worst case is the place burns down. Then you have insurance and are happy because you get to build it new and the insurance pays for it.
Yeah, but obviously there are always going to be some repair costs. Things will break. You'll have to do replacements. You'll have to repair. You'll have to do some sort of maintenance for the house, for the apartment. You have to pay the stuff that
it depends a bit. It depends a bit. So in a scenario like this, where it's completely cancer-neared, where everything is done, it's very unlikely that you have big repairs. So I have a friend who owned an apartment that was also cancer-neared for 10 years, and he never had one single repair.
Okay.
So in apartments like this, it's very likely that you have small repairs, like the water is leaking, or like the door isn't closing anymore properly, or the Rollladen is whatever is broke. So stuff like that costs a couple $100, right?
Yeah.
So that's why we mainly, to the first apartment, I would always recommend buying renovated ones, right? Because there you have the safety, you can rent it out instantly. There will be no big things that are going to having to be done in the next 10 years, right? Very different it is when you buy, of course, a bit of a rundown apartment that's already older and hasn't been renovated in a while, and all of that. Very different picture, right? There, of course, you have to calculate the renovation cost and all of that, and have to have a lot more extra cash for things that can break. Also, for an apartment like this, if you have 40,000 euros on your bank account, I would not recommend you buying this apartment, right? Because you need to bring in 37,000 euros in equity, right? Only having 3,000 euro left is not good. You would always have a safety cushion, basically, that you have for that, right?
Okay.
So the last thing, basically, which I said the cherry on top was, this calculation is without considering the KfW loan. And the KfW loan, as it's so energy efficient, the property, for the 150K, we get a so-called Tilgungszuschuss from the KfW of 10%. That means the government bank basically pays down 15,000 euros of your mortgage.
Okay.
So that's the cherry on top then that I said that comes on top. So even if you have 15,000 euros in repairs, which you're very highly likely not going to have for this property, it still would be this profit.
Who will be covered by the KfW loan.
Exactly. So they pay down 15,000 of your loan, which of course we don't have for all of the properties. That's why I said this would be a very good example. And like apartments like that sell very quickly, of course. quickly, it's still real estate. It's a couple of weeks, a month, quickly for real estate. So that was the cherry on top that I was talking about with those properties. That's why I say, okay, buying renovated and nicely fixed up basically properties is a very good idea as a first investment or as the first couple investments, especially if you do it as an investment that you want to have as least work as possible.
Okay.
Essentially.
So let's do a concrete example. Let's have a scenario. Let's talk about someone who has a certain salary and a certain amount of capital, and then maybe we can have a simulated scenario. So let's say if there is a couple, there's a husband and a wife, and have a kid, let's say.
Yeah.
So the spouse doesn't work, only one person works, and let's say their salary is 80,000 euros. And for this example, let's say they have 50,000 euros. So how would you recommend them to proceed? What would be your consultation to them?
Yes. So basically, this is what I showed you was an example. This example would pretty well match basically this family that we just talked about, but how the standard procedure is, right? For most kinds in your scenario, the Bestandbau is going to be so already built apartment is going to be better for 99% of the people watching this video also, right? Neubau is very specific. So then you fill in your data, how much you make, you're married, what is your household expenses, household income, how much equity do you have saved up, right? Then you type in all your data basically in the form, right? And then you can book a consultation with one of our consultants who then will look at your specific situation and see, okay, what are your goals? What is your capital? What are you trying to achieve? Right? And then search out specific properties and apartments for your exact situation. So maybe you want to start a bit smaller, then start with a 250K apartment. We will then search our properties for that. And if we don't have something on stock currently, we will have you in our database and you will get regular updates from basically apartments that fit your exact criteria.
Okay.
Once we have found it and say, okay, perfect, looks nice, then we also check the entire financing. So we are an all-inclusive package where everything is done for you, right? So you always get the best financing conditions on the market. We compare over 400 banks there. Also help apply if it's applicable for a KfW loan, help apply for that, right? So everything is done for you basically in the buying process. And then also in most cases, the Erstvermietung is included so that you get the first tenant basically. And then we recommend the Hausverwaltung and then everything further is communicative from the Hausverwaltung and you. But that's like the buying process basically of how that works. And again, it's always individual for your individual goals and capital and salary and all of that.
Okay.
Normally, this consultation costs 250 euros. Because and now when people say, oh, but the pension consultation is for free and all of that, yes, it's true. Also stays for free. The thing is, we can sell as many pensions as we want. There's no limit to that, basically. Real estate, much different. We have a very hard selection process. Means we have very limited properties that fit those criteria that we're looking for. Means we have more clients than options.
The property.
Right?
Yeah.
And they like want to buy. So the small consultation fee at the beginning basically is just, okay, we only want to speak to people who are actually interested. Right? When you're actually interested in buying an investment property, 250 euros is nothing. What Ashan and I have discussed, you can be very happy that you're a subscriber. What we're going to do is we will enter a code basically in the comments. You can also type it in here, then in the editing.
Here is the code.
Exactly. And with this code, you will get 100 euros off the consultation fee. Then it's only 150 euros. If you basically go through that video and use that code, you can then just type it in the checkout. Basically, once you typed in your data, you get to the payment page, and then you can enter the code, pay, and then you can book the appointment with one of our consultants. So that's like then a little cherry on top for your specific viewers.
We can just discuss how to buy a property, not specifically with you, but generally how to buy a property. What things should we consider before the buying process, and then the neighboring question, what is done. And then I would also like to discuss your fees, like how is your fees structured and what kind of services do you offer? Can someone just pick a certain thing? Maybe they just want to get a consultation on general housing. Maybe they have and a house in mind, maybe you can assess this. So the services that you can discuss. So probably these two things or anything else in addition that you have in.
Yeah, great question. In general, like the buying process is you find a property, you check it for your criteria, then you take this specific property to the bank or to your financing consultant, and the documents that they always need is your last 3 payslips, right? And the last 3 bank statements from all of your bank statements. And so that's basically just a piece of paper, which we have included in our website, where that's basically already filled out. But it says, this is my income, these are my expenses, these are outstanding loans that I have, these are maybe property that I already have, this is my depot, that's how much it's worth. So basically where you lay everything down for the bank, and of course the more assets you have, the more income you have, the more attractive you are for the bank, right? So then you get everything to the bank and or to the financing consultant or mortgage brokerage. Then they check with the banks, right? They maybe have some back questions regarding your property and all of that. But then you get, when everything runs well, a Finanzierungsbestätigung. That's basically a document from the bank that confirms, hey, you are applicable for this loan. We guarantee you that you get a loan for that. Then when that step is taken, only when that step is taken, right? I would never do something before that. Then you book a meeting with the notary, right? And then you get the buying contract 2 weeks before, which you can read, the buying contract. And then the seller and the buyer meet at the notary. And then the notary reads in very quick that the buying contract again. So you should have read it before that. And then both parties sign the document. And very important, only go to the notary when you have the Finanzierungsbestätigung, or in theory, the cash to buy it. Because once you have signed in the notary, there's no going back. There is no nothing. When you have signed in a notary and you don't have the money, then you go in the Zwangsvollstreckung. Then all of your assets are taken, and you have, in the worst case, to declare basically bankruptcy, right? So never go to the notary without having the financing secured, because there is not like a consumer thing that you do where you can just cancel the contract in 2 weeks after. Once you've signed there, you have to pay the money, no matter what.
So there generally you also have, so once you sign, the payment or the Nebenkosten will be applicable as soon as you sign. Obviously, there would be some time frame, but at that time you also have to pay this amount as soon as possible.
So as soon as you sign, basically, then the contract is sealed and done. And then the first invoice that you're going to get is going to be from the makler, in this case, us. So basically the broker who has the 3.5% fee that you have to pay. In many cases, we can structure it also that it's like tax deductible when we do it as a financing fee, but that we discuss individually with the client is always 3.5% that you have to basically pay to the broker. That's the first invoice that you're going to get. The second invoice that you're going to get is basically the taxes, right? So the taxes, so the notary is the second invoice that you're going to get, not the taxes, because they post the invoice also pretty quickly. And then once this whole process is continued, you're also going to get a bill from the taxes, right? So the Grunderwerbsteuer, which is 5% in most areas. So that's the invoices you're going directly to get, right? What happens in the background, basically, is that the notary goes to the Grundbuchamt, and the Grundbuchamt basically changes the owner. And there, basically, they put the bank also in the Grundbuch, right? That they have the object as a security, right? And then when the buying price is actually due, which is a couple of weeks after you sign, right? Again, German bureaucracy, very slow, real estate, very slow. But then when the actual buying price is due and you're financed 100%, then you don't even notice, basically, because your bank that you financed with is going to directly wire the money to the seller. So you never...
But you still need that 10% or 11% wherever you're living. That is like due as soon as possible, right?
Yes. So also it takes 1 or 2 weeks, but imagine it to be due right when you sign, right? Yeah. So then, of course, you also have a couple of days to pay the invoices and all of that, but you should either way always have this money and a safety cushion, right? Let me maybe show my screen again, then you see the exact details. Yeah. So these 37,000 that we mentioned there, right? That's the Kaufnebenkosten. That's your down payment, right? At least when you have a very good, solid investment property. That's your down payment. And 12,000 or 3.5% is for us as the brokers. Basically, that's how we make money on a real estate deal. Then the notary charges 1.5% plus 0.5% for the Grundbuch, so 2%. That's 7,000 to 8,000 then in this instant. And the Grunderwerbsteuer is like the taxes, the property buying taxes. That's 17,000 euros in this instance.
This is for Baden-Württemberg, and
This is
I
for
think
Baden-Württemberg.
it's similar or a little bit different for Bayern, right?
Yeah, Bayern actually has a lower tax, so that's pretty cool. But like other areas have a higher tax, so on average 5%. But we always show this in the calculation basically.
Okay.
And now going back to then just to finish the process thing, right? Then as soon as the Kaufvertragszahlung is done, so the money is actually wired, right? Then you will be basically written in as the owner in the Grundbuch, right? Then it's actually yours, right? And then basically you get the keys to the apartment, or when it's rented, you get like all the rental contracts and all of that. And normally you just do a specific date with the seller, for example, 1st of May or 1st of June or whenever. This is when it's yours, and then you inform the tenant, hey, there's a new owner, please transfer.
And then the rent needs to be transferred to this bank account instead of this one.
Please transfer the rent to this bank account, and then it's yours. That's basically the buying process. And yeah, for the point that you mentioned earlier in the video with 110% financing. So if you're a really smart, savvy investor, right, then you say, I always want to put as little equity as possible into a deal, right? You need to have the money. Very important. This is not, I have no money saved up, let me buy real estate. This does not work. You need to have the money. You need to have at least 50 grand here, for example, in this example, or 40, but I would always have a 10,000 euro cash buffer. So what we can do, what we can negotiate with some sellers, what we always try to do for our investors, that basically those fees, those closing cost fees, right, are paid by the seller.
Okay.
So that basically we negotiate with the seller a higher buying price. For example, in this case, 380,000 euros, right? But we write in the contract, hey, the seller has to pay the taxes, the notary. Right? This way, all of those costs basically are not having to be instantly paid by the buyer, but are basically worked in the deal, and the bank finances that. Right? So either that way, or we get an actual 110% financing. The only thing then that the client has to bring in as the equity is the 12,000 euros, which is our payment.
Okay.
That, of course, means you don't have a loan of 355,000, you have a loan of 380,000, right?
Okay.
That means also in your cash flow, your mortgage is then 1,500. Then you have 150 euros negative cash flow, save $100 in taxes, so you pay in basically
59 euros per month.
59 euros every month. But what you also, exactly, right? So your cash flow is a bit negative, but what you also see, your profit is very similar to what we looked at before when you put in like the 37K in equity, a bit less, yes, but very similar, right? And of course, your return on equity, this is now an absurd number, right? And 96% per year, your return on equity. But like you only put in theory 12,000 euros initially plus accumulated cash flow 1,400 euros, right? Of course, we both know you have to have a lot more money to actually do that, right? But in that time, you can leave at least your money in the Tagesgeld where you get 2.5% at the moment, right?
So how would someone be able to get this deal? Is it, for example, do they have money in a depot konto or an investment account, or how would someone be eligible to get this kind of a deal?
Yeah. So for this kind of a deal, you need a very good bonität, right? So the bank does not do this when it's close, right? You need to have a very good income. And then, of course, we need to have negotiated that with the seller, because not all sellers want to do this, basically. And you need to show the bank the funds, right? So in optimal, the easiest, it is just to have it on your bank account, because then it's just there. Because with a depot, then banks calculate differently. When you have 100 grand in a depot, some banks value that at 60,000, some at 70,000. So best is just to have it in your bank account, even though if you can, as soon as you're shown the bank and the deal is through, you can go ahead and invest the money again if you want. But it should be in the bank account. And then you can buy good investment properties with very little equity, right? And have a great return on your capital. But what's very important, you need to have the money and the liquidity. Also to sleep well. Because if something happens, right, again, renovate your property, I can show you some pictures in a moment, very unlikely that something big happens there, right? Assume the worst case. Assume, hey, let's say, really, I have a Mietnomade in there. I have a tenant, even though that's 1 out of 100,000, like people always hear stories, it's like very unlikely that you have a Mietnomade, so a guy who just doesn't pay the rent. First of all, when you select your tenants correctly, look that they have a good salary and a good renting history, then this will almost never happen, 1 in 100,000 again. But let's assume the worst case, and you don't get rent for 9 months, but you have to pay the mortgage, which in this case would be 10,000-15,000 euros. Just have that aside. Just have that aside for a good night's sleep. Because if that unfortunate scenario happens, then you need to do a Räumungsklage, and that takes a couple of months.
Yeah, it takes time.
Yes. So when you take the brokerage basically way to get the tenant out when they don't pay it, it can take some time. Just have the money. By the way, when you're a problem-solving thinking person, right? Then you don't go to the lawyer and the Räumungsklage and all of that. That is really the last instance. Then you go to your tenant and say, hey, you haven't paid rent in 3 months. I've given you all the warnings. We can either do the Räumungsklage, then you have to move out by the Gerichtsvollzieher, or hey, here's 2,000 euros. Please just move out. This is not working. Search yourself another place. In many instances, you can just, when you're just a friendly, normal person who like speaks to other person like a normal, friendly human being, you can actually solve most of the problems that you have with like these really extreme scenarios, right? But what I was saying, just keep some money as cash in your account in order to sleep well, and then you're gonna be fine. So real estate, the very rare cases that you lose money with real estate if you run out of money, right? That's like, that shouldn't happen in real estate. You should always have a good cash buffer and never over leverage yourself.
It's an important thing to consider. Yes,
exactly. Because the more leverage you have, of course, the more risk you have, right? And when you have a good, basically, capital versus debt like equation, then it's all fine. And when the debt is good, that is backed by assets and that pays you a constant income, it's good. Then please don't buy your car and whatever, or that's way too big on like loans. That's stupid debt. That's consumer debt. That's never good for you. If you can't buy a car without a loan, then you cannot afford this car. This would be a topic for another video, right?
Obviously, there's good debt, bad debt. You need to take good financial decisions so that you can not only survive. Our goal is to thrive. Our goal is to build wealth. So it's important to take risks, but those risks should be calculated and then make good and well-educated decisions.
Exactly.
And don't be rash.
Exactly. That's very well put. And rather take more time to build wealth than being like on the quick side, trying to gain something quickly. Because again, you won't get rich quick in real estate, right? If you try to do that, the likelihood is more that you're going to go broke in real estate. If you also don't know what you're doing and try to buy a property, sell it and all of that. So please, just as any investment, you need to have the long-term view. You need to have patience. You need to have consistency. And yes, it might be very boring just to do the same thing over a 10-year period, but that's what actually makes people wealthy and successful, and not this short-term thinking. You need to get this short-term thinking out of your head. The same thing with retirement planning. You will achieve nothing if you have short-term thinking. You need to do something good consistently over a long period of time, and then this will work out very well. So that should always be the key message. Also with ETF investing and stock investing and all forms of investing, retirement planning, real estate, you always need to have a long-term perspective in order to make a good investment work. Right?
Absolutely.
That's always a very important.
So coming to your fees, you always get this makler provision. Is there anything else that you charge?
No. So basically, we have the 250 euro for the consultation, right?
So 100 euros discount if you use this.
Exactly, yeah. When you sign up through Ashan, then a 100 euro discount. So that's the first thing. And then when you actually decide to go ahead with the property, then we make the money, essentially, the 3.5% commission we get. And of course, when you do the financing through us, right, then we get a little fee from the bank, basically a little commission from
But
the
not
bank.
from the client.
No, not from the client, exactly. So that's very, very little amount nowadays. You ask also if we check properties that people want to buy. Yes. So the real estate consultants I'm going to speak with a link, they are specialized in the financing. So if you want to also buy for yourself, for example, and want to just check, hey, does this investment make sense financially wise? Does this buying for myself make sense financially wise? Then feel free to go through a link, costs 150 euros. You will get good feedback on basically what you have. If you want the financing, if you want the best conditions, maybe you already have an offer, want to get a comparison offer, also feel free to use that. I can just say from my experience, all the clients that I have sent there also from the financing always got the best rates there. I also did all my financing through our company. Yeah, happy client there myself, essentially. Yeah, feel free to check that out when you're also buying for yourself. But then, of course, it's mainly for real estate investors who want to say, I want to buy a good, solid investment property. I want to get started with this, and I want to have everything taken care of. Basically, everything is taken out of your hands that can be taken care of.
Cool.
And then I can guarantee you when you've bought the first one and then you get used to it, mortgage going out, rent going in, mortgage going out, rent going in. Maybe there's a small repair here, maybe there's this there. And when you do that for a year, get used to it, and you like it, I can guarantee you that we speak again next year, or you speak with one of our consultants again next year, because it's addictive. Like when you see how, wow, this is working, right? This is really nice. Then you see, okay, why not buy more? Right? Again, you need to build up equity again. So you need to save money, of course. Again, we talk about spend less than you make, right? Always. So you need a down payment again, but when you bought with little equity, you have the majority of the down payment still. So as long as you have still a very nice salary and a good bonite, then you see, okay, you can buy again and again, right? Of course, again, slowly over time, take your time. Don't rush anything. Don't rush everything. And also don't try to time the market. I had this with a client this morning. They said, oh, is this now a good time? And the interest rates and the regulations and the world economy. Like in ETFs and stocks, don't try to time the market. The best time to buy real estate was 20 years ago or 100 years ago. Right? The second best time is the same with ETFs and stocks and like assets that appreciate over a long run. Yes, it would have been nice to buy earlier, of course. Everyone thinks that. Yeah. But this is like the second best time to buy is now. I actually think this is now a very good market phase to buy because the interest rates are high, right? High in comparison to the 1% that we had. Now it's at 4%, right? Yeah. It's still historically pretty low, but the interest rates are high. Therefore, basically the prices are way lower. And when interest rates go down again, the prices will increase, of course, again. So if you say, oh, I want to wait to buy until the interest rates go down again because then my mortgage is cheaper, guess what? The sellers are not stupid. They know you can afford more, and of course they will raise the prices. Right? Yeah, that's why I say don't try to time the market. You hold this investment for 10 years, 15 years, 30 years. It's a very long-term perspective, right? So don't try to predict what's going to happen in the market. If you could do that, if you really knew what the market is going to be, then I always ask when people think that, hey, are you already the richest person on earth? And if the answer is no, then you cannot predict the market or you don't have the certainty to act on it. So that's why I say don't try to predict the market. Limited assets are going to appreciate over a long run. Productive assets like companies, stocks, so probably ETFs and real estate have always appreciated over a long run historically. But that's all you know. How short term that works, it really doesn't matter. And don't, like I know so many people who always say, yeah, I will buy when prices drop. And then when prices drop, I say, hey, are you buying? No, I'm waiting to drop it even further. And then it goes back up again, and these people buy themselves in the
missed my chance.
Why didn't I buy? So don't try to time the market. It really does not work in your favor in most of the case. Yeah, just buy good assets that work and hold them for a long time, and you will be very happy. in the long run.
So I just wanted to get an opinion. There was a question from a couple of people who said that they have some cash, right? So let's say they have 90,000 euros and they want to buy directly a small single room apartment,
Mhm.
totally on cash, and they want to let it out. So what's your opinion on that?
No, so that's basically the thing that makes real estate interesting is the leverage effect, right? If you have 90,000 and just want to invest it without that, then just do a ETF. You have no work whatsoever with the ETF. It's like setting up an account one time and just let the ride. And on average, the MSCI World in the last 50 years appreciated 9% per year. Right? When you buy a very good like real estate investment, it has like a rental yield of around like in a good location, not in the east, in a good location. Rental yield should be always the aim to be between 4.5% and 5.5%. That should be the aim. And then the appreciation of the property, again, we calculate with 2%. So your overall return with no debt is 7, maybe 7.5%. And you have way higher fees in real estate, right? You have first 10% is just gone basically, right? Sure, in the negative in quotation marks. So that you gotta take some time to catch that up basically. So buying real estate with cash as an investment really makes no sense whatsoever, in my opinion. If you have 90,000 euros and you wanna get started in real estate, you don't have a big leverage, then just start with a 250k, 300k apartment, put 20, 25, 30k down payment on it, right? Have a very good night's sleep. You have a very high cash buffer. Have the remainder split between Tagesgeld and ETFs, right? And have this as a start in your real estate investing journey. If you don't like this idea of having that and all of that, then just real estate is not for you. It's like there's no shame with that. Also, when you want to have no work whatsoever, then real estate is also not for you. Yes, we have a property manager, yes, but it's still coordination work. It's still, you have to do your tax declaration. Yes, you can pay a tax consultant for that, but still you have to give documents and all of that. There's a bit of more active work involved in investing in real estate. And if you just want to have a stable return, then and basically don't have this leverage effect, then buying cash real estate, I
It's
would
not,
really
no.
not recommend it, because where's the benefit? You have more hassle for less return. Right? So that's right. If you want to go there, then buy a 200, 300k apartment, down payment, and all fine. Right? If you say I have 90k, I have a very good salary, and I want to like really build up a good portfolio, right? Then say, okay, I buy with as little equity as possible, and I don't buy one, I buy 3 to 4 apartments. That's then where you can scale and see, okay, I'm really building a bigger portfolio with that money. But like buying cash is just, not a good idea. Also in terms of liquidity, right? Alone the liquidity, when you buy 90,000 cash, then you have no more cash if something happens. Yes, you can then in most cases still get a loan from the bank, but I would always have cash in your account that gives you a good night's sleep. That's always a very important message. So don't buy real estate cash as an investment. It's usually not gonna be a very good investment.
Okay. I think we had a really good discussion today. And don't forget to use the first link in the description if you want to have a consultation with David on real estate. And the second link would be the link for a private pension. So thank you, David. Thanks for joining me and sharing so much valuable information. And if you want to listen to our previous conversation that David and I had on private pension plans, you can watch this video. And I also had a discussion with Marcel, again, who is a team member with David on private health insurance. You can watch that video here. So thanks for watching Prerequisites, and I'll see you in one of these videos.